Hey guys, it's BlockchainBrad, and today I'm speaking with someone I've spoken to before on a podcast. His name is Dave. He is the CEO of Black Diamond Group and also the CEO of Block Journal, which is a well-known and prominent magazine that many people respect in the crypto space. And he's also well known for his Crypto Godfather Twitter handle. Mate, thank you very much, Dave, for being here today.
Hi, Brad. It's good to be on. Thanks for having me, and it's good to put a face to the voice we've spoken many times.
Absolutely, mate. And likewise, I mean, having spoken to you before, you are the real deal when it comes to transparency. You are very willing to be objective. And thanks again for coming on and having this crypto chat. For those who are wondering why, essentially today it's all about trying to explore BTC, really unpack what it means and certainly what it means from Dave's perspective as someone who is a lead speaker and figurehead in the space when it comes to media. So Dave, mentioning Bitcoin, it has so many different perspectives, so many different facets. But fundamentally, in a nutshell, how would you articulate and encapsulate what BTC essentially is?
Okay, well, first of all, everyone knows there's the two Bitcoins, right? The Bitcoin with a capital B, and then there's a small Bitcoin, which is the cryptocurrency itself. So Bitcoin, in slightly more technical terms, is the first platform for blockchain, and then the godfather of all cryptocurrencies. And then I see Bitcoin as the first catalyst to changing the future of money. I think for people, it's hard to understand. You hear of BTC the first time, you hear of Bitcoin, and people immediately, unfortunately, the industry is attached to monetary gain, profits, people making money very quickly. And unfortunately, that's how it's presented, right? When we see Bitcoin on CNBC, on Bloomberg, it's always talking about 10% growth, 30% growth, 100% growth over the past few months. So people automatically attach that sense of quick money to Bitcoin or as an investment vehicle. But how I see Bitcoin really is the future of how money and personal finance and also institutional finance will be changed. I think it's the future of money. It may not be Bitcoin itself to be the one that dominates in the end, but I think it's the beginning of a very big revolution that might take 5 years, might take 30 years, but eventually I think we'll get there. That's really how I see Bitcoin.
Right. So essentially pro-currency in the sense of trying to establish some sort of sound money, to use Andreas's term, often that he essentially has coined. But if we move it back a bit, for those who possibly haven't heard that bifurcated argument of the big B, the little b, can you talk us through that a bit more as well, Dave, so we understand the differentiation between the two?
Well, Bitcoin is with the big B, the capital B. Bitcoin, that's the platform, the technical platform of where everything exists coincides with the blockchain too, right? So Bitcoin, that's referring to the whole platform where the whole mining networks with proof of work supports this whole system of how transactions are sent around, the transaction per second, the blocks in the blockchain. How this whole system is what I define as Bitcoin with a capital B. And then when we talk about Bitcoin with a small b, BTC, that is really where I'm just thinking cryptocurrency. Much like many of the other cryptocurrencies, it's a product that comes out of this whole system with a capital B, right? This whole system with a capital B is what's the whole framework supporting everything in this blockchain. It's the blockchain, it's the proof of work. We got the miners breaking the algorithms to reward us with this small b Bitcoin, BTC, which is where the dollar value is attached to.
Got it. So just to, I guess, reassess this in an analogy or to liken it to any other crypto, fundamentally that small b is the crypto coin. It's the fuel for the overall and overarching ecosystem that is the bigger b. Is that a fair way to look at it?
Exactly. Much like many of the other cryptocurrencies too. It's just, to me, I just see Bitcoin as Bitcoin is still king because it was the first, and also it's the most well known.
Right, and we're going to talk deeply about that statement and many other things. But let's move it into some of the key characteristics of BTC, the ones that are more commonplace for those who are crypto savvy. Now, one of the arguments that it's pseudo-anonymous, another argument is that it's an asymmetrical digital asset. Can we talk about that concept with regard to the narratives that we hear, especially from the lead speakers, those advocates for BTC, whether they're Bitcoiners, whether they're maximalists? certainly the advocation is such that it is purported to be a leading digital asset.
Well, you mentioned 2 points. One, that it's pseudo-anonymous, and two, that it's asymmetrical to other assets or traditional financial assets. This is actually one. I'll talk about the second point first. The pseudo-anonymous is not something I'm too much of an expert on, so I'll stray away from that. But from the financial aspect, a lot of people mention, for example, like Anthony Pompliano, he's often seen in media or outlets talking about how Bitcoin is negatively correlated to the stock markets, to just traditional economic indicators. Basically, and to put it in simple terms, for people who may not understand, it's what you're trying to talk about. What we're talking about here is when the stock market goes down, Bitcoin theoretically is supposed to be going up, right? That's talking about Bitcoin as an asymmetrical asset,
right.
But that's a really important point. I've been watching the market over the last 2 years. We've seen the stock markets hit all-time highs recently, and also it's been going up over the past few years, especially after 08. But talking about more recently, the American stock market, the global stock markets have been going up, except for the last, I believe, today is August 20th here. A couple of days ago, there was the second largest drop in the stock market of 2019, and that day, Bitcoin price actually coincided with the stock market drop. It dropped from I believe 11K Bitcoin price to 9.4, 9.5K, which is a significant drop. The stock market dropped about 3% that day, the Dow Jones, and then Bitcoin dropped about 10%. So obviously we can't look at one point and say, oh, Bitcoin's not asymmetrical anymore. I do think that overall Bitcoin as a store of value, as an investment, is quite asymmetrical. It's just that right now we're touching on a more important point where Bitcoin and the entire cryptocurrency market is still too small and unknown to the real big money players. The stock market investors, I imagine many people around the world invest in stocks. I imagine when the stock market is going down, people are selling and they're keeping it in cash or bonds, but I highly doubt that people are putting it into Bitcoin at this moment because we're just too early.
Right, I would tend to agree. And the question is, given that you've been transparent about the presence of that correlation recently, the alignment of the different markets, do you think that sometimes this narrative that's presented, especially by the maximalists, of this asymmetry, do you think sometimes that's just simply a narrative in itself? If it's reasonable to say now that there's still not yet clear proof or empirical evidence that can be clearly defined or evidenced.
So you mentioned clear proof, and I try to talk about this with the facts, but the most recent one I can remember is just the last example I made of a couple of days ago, because my memory sometimes is not so clear. But what I do remember is the last few times. I watch this every time when the stock market does drop significantly. I've noticed that Bitcoin has not made any clear asymmetrical movements. It's either gone down with it or it's remained quite stable. So I don't think the numbers today show that Bitcoin is completely asymmetrical. Actually, I would even quite directly say that it hasn't proven that it's asymmetrical yet. You mentioned that it might be a narrative for BTC maximalists, and I do believe that the people who push this narrative, they do believe it as a store of value against traditional fiat or other markets, but I don't think that Bitcoin has hit that point yet.
All right, and I really appreciate your response there, Dave. Now, with regard to some of the other inherent characteristics, some of them, for example, the term decentralization, we hear that thrown around consistently. What is your position with regard to BTC? Do you feel that it is authentically decentralized, and does it even matter?
It most definitely matters in the sense that being decentralized and the whole network running by itself that's an amazing piece of technology. It really is quite cool. I mean, the first light bulb moment when I was sending some BTC or Ethereum around a long time ago, I was like, wow, this is pretty cool. And then especially after China banned exchanges in 2017, it went to show that BTC truly can withstand the tests of central governments, right? After the Chinese ban, which was quite a significant blow, people thought it was a significant blow to Bitcoin, but its price went up, volume actually increased, and people started realize. I think that's when people really started realizing that to shut down Bitcoin, you would need to shut down Bitcoin in terms of capital B and small b. You would need to shut down the internet, which is impossible, right?
Right.
That's something that's just not going away.
Sure. Now, obviously, in that respect, it doesn't have an off switch, and that is one part of the equation of the decentralization. But let's talk about some of the questions within the construct and the way in which BTC is supported and built. We have entities that clearly support the infrastructure, such as Blockstream. What are your thoughts on those supporting agents and agencies that help facilitate the unfurling and the decentralization of BTC and of the Big B?
I mean, this question you asked really just it touches on the whole beauty of how Bitcoin works, right, and how many other cryptocurrencies work. We have decentralized. Bitcoin is so decentralized now, where even if you were to shut down all the miners in one country, it really makes no difference. It would take a global effort of the entire world shutting down these mining factories and these mining pools to really shut down Bitcoin, which is really unlikely at this point, because we see many of the larger countries, they're actually supporting mining. They might not be fully in support, but they are letting it happen. China has shut it down, but I do think that hey, even to this day, there are still many of the largest mining factories are still in China, right? It's essential that these supporting agents do keep being rewarded, and that's the beauty of the whole Bitcoin network. For every block you get rewarded a certain amount of BTC, and it's really a great system. If you think about Satoshi's vision when creating this, not to mention Bitcoin SV, but right. Bitcoin BTC. When you think about Satoshi's vision creating this, it's really that's really how beautiful it is. It not only increases in scarcity as time goes by, but which economically speaking, as the supply goes down in the future supply, the price and value of BTC should be going up. And we've been seeing that for the last 11 years that Bitcoin's been existing, right?
Right. Well, in that context, let's talk about that. I was planning on doing this later, but given that we're talking about an appreciating asset, essentially, the question of asset needs to be asked. Do you actually deem this as an asset? And also, with regard to the allusions to gold, the digital gold, do you agree that this has the potential to be regarded as some sort of new digital form?
Oh, most definitely. This is actually a topic I've been looking at. We've been looking at it here at Block Journal for the last couple of weeks. Bitcoin as a comparison to gold, as a digital gold. It's right. Really, as many people have said before me, Bitcoin as a digital gold, it's far better than physical gold in almost every single way I can imagine. It's divisible. It's much more easily transferable. Let's look at someone like me, for example. Someone from my generation, I first of all have never purchased gold in my life. If I were to purchase gold, my first step, I would have to find a gold dealer, probably look for one online, and it seems like a very tedious process. I think as we move forward in time, the next 10, 20 years, people are becoming a lot more technologically adept. The younger generation, as we move forward, everyone's using computers and mobile. And I think that that's the first point I'll make. Physical gold compared to Bitcoin is just a lot harder it seems old school. It's harder to understand. It's harder to look into, and it's a lot less sexy than Bitcoin. That's the first point I'll make. Second of all, it's less divisible. An ounce of gold right now, I think, is trading around $1,500. I do try to keep track of the gold price too. And Bitcoin, I have no idea how you would divide an ounce of gold. Bitcoin, you can divide all the way to 1 Satoshi, right? So second of all, it's more divisible. In terms of, to understand Bitcoin as a store of value, I do think you have to look at the history. You do also have to understand gold and a little bit of its history. gold, I think the first use of gold was first findings of human using gold was about 40,000 BC. They found gold flakes in caves, and then after that, Egyptians started using gold as lining their tombs of their pharaohs with gold, because gold has the chemical properties of being everlasting. Oxygen doesn't make it deteriorate, and it lasts forever, and it does look quite beautiful. That's what makes it different from steel, copper, iron, all these other chemical properties. Gold as a store of value, it's great, right? Gold has really become quite asymmetrical to fiat currencies. When the stock market goes down, when people lose belief in the gold, then they in fiats, they start investing in gold. Up until 1971, it was the gold standard was dropped by the US, where people started pegging fiat currencies together rather than pegging currencies back to how much a country holds in gold. So that's sorry for the brief history lesson.
I appreciate that, because I think it's very important to understand if we're going to use the argument. So once again, thanks for firstly looking into that and knowing that and relaying that. But let's talk about that a little bit more in terms of the context of utility and commodity, and even currency, because if we're going to go into the discussion of gold, we do need to touch on those very important terminological aspects of BTC as the coin and even the ecosystem, because the question has been asked by several gold experts about utility itself. Now, if gold itself initially is born in its own utility with regard to its physicalized properties, essentially with what you started with the allusions to Egypt, how does BTC once again reinforce those fundamental aspects of what emerges as an essential asset that becomes adopted globally, such as gold, whereby it has had evidence of all three?
So people make the argument that nobody's spending BTC. BTC is not being used. But if we look at that argument compared to gold, nobody's spending gold to be purchasing things either. I can't remember the number, but it's a very, very small percentage of people who are actually using gold to actually make products or to spend it. It's really just a store of value. Most people who invest in gold probably never see the gold that they buy. It's held elsewhere, much like Bitcoin custodial services. So in that sense, Bitcoin is very much the same way. And I'm not the person to be arguing that Bitcoin adoption or use of Bitcoin, people have to be using it to spend. I really don't think that we're at that stage yet. I think Bitcoin first has to reach far more awareness worldwide. But I think to your question, as awareness of Bitcoin grows, I think people will be moving a lot more. The shift of people who are investing in gold, I think that money will slowly drift towards Bitcoin, because there's in every way, like I said, it's divisible. It's more easily transferred. It's much more anonymous. I mean, I can't walk through the airport terminal with a bar of gold in my backpack.
Right. Well, let's talk about that, because obviously you're aware that Peter Schiff is one of those, very loud and vocal speakers for his own agenda with regard to the valorizing gold. Now, he argues that it is possible to have digital gold in the sense that you can digitize through means of essentially credit cards, to liken it to current transactions via fiat, that are digitized now. He argues that, that being supported by fiat systems means you can do conversions into fiat very readily, and you can transport your own asset in that way without having the physicalized asset. What do you say to his argument that it is possible to in fact transact, to purchase and to transport gold without having the tangible asset in hand?
I'm no more of a proponent of Bitcoin than I am of gold. I mean, I think what he's saying is, to his statement about using gold, transferring gold to a digital asset, my only answer to that is why not just use Bitcoin, right? It's already a system that's in place.
Right. Well, to play the devil's advocate, I just want to flip that though, because if you're asking the question, Dave, of why not just use Bitcoin, his argument would be, well, gold was existent prior to Bitcoin, so why not use gold? And the other argument he would put forward, I would imagine, is that currency itself was born from the utility, and then from that came the commodity. So the question must be asked as well, is it a case of chicken before the egg? Shouldn't there also be some inherent currency values, some evidence empirically that it's being adopted in that sense as it develops as a commodity as well?
So the reason people believe in gold is because it was originally backed by government reserves, right? Unfortunately for Bitcoin, what Bitcoin does lack in comparison to gold, speaking also from a devil's advocate perspective, is that it's completely based on the belief of it having any value, and also it's based on the belief of global belief. Let's break it down to let's break the entire world market down to a very simple case. Let's say instead of the millions of people who own cryptocurrencies or Bitcoin, let's say it's just me and you. You're over there in Australia, I'm over here. And then my belief in Bitcoin really is based on the fact that you believe in it too. My belief is that if I wanted to sell my Bitcoin for $10,000, you're willing to buy it for $10,000. Otherwise, it's worth nothing, right?
Right.
Fortunately, the growth of believers in Bitcoin and the growth of the market has been going up, which means more and more people are believing in it because it is so decentralized. That's a good thing and a bad thing. Decentralized is good in that it really gives people belief in it because it gives power. It does give power to the people in a certain way. You do have much more control over your own finances and your own net worth. Whereas on the other hand, it's bad because we don't have a big government coming in and saying that we're going to be reserved in Bitcoin, right? That's the power that gold has currently over Bitcoin, which is a significant, large power.
It really is, Dave, and that's the thing I would really like to talk more about, because you mentioned that the fundamental asset is the belief. The fact that BTC essentially is the belief coin right now, and some would argue is the people's coin, which we can really explore as a concept. I mean, Andreas argues that it is the premise of sound money eventually, but right now the power of belief is very strong in the network. So in that sense, let's discuss the imperatives of regulation as one of the core assets of gold. Another thing is the global adoption from enterprise and also from government sectors. That's happened over time. In fact, all the way through to the first evidence of gold, it wasn't just the people that adopted it. It was societies, and it was the state. So given that has not yet happened, and in fact there's been more of a push against that through the G7 alliance and certainly through independent nations and sovereign states, are you concerned at all that we could move more to a greater polarization of support when we do that comparison between gold and Bitcoin?
To very simply answer, yes, I am very concerned about the relationship between Bitcoin supporters and government. More recently, this has been quite a hot topic of government and their views on digital currencies. Very briefly, we look at Facebook Libra recently, which has made its way onto the stage of how do governments respond to digital currencies. Bitcoin is already, I would say, overall in the world, quite negatively viewed by most governments. Especially, more importantly, it's negatively viewed by most of the larger governments. The USA, China, I think Singapore and Japan might be two of the ones that view it in a more positive light. But look at India too. India is heavily against cryptocurrencies.
Right. And there's also suggestions of England even shedding some questionable light on the subject as well.
Yeah, and when Facebook Libra even came out with this proposal to launch their project next year in 2020, all of Europe was heavily against it. And the thing is, I love everything about cryptocurrencies, and I think that Bitcoin is great in the sense that I do think it's the beginning of a new revolution, much like the internet. But I think it will revolutionize personal finance and also how we send money around. But unfortunately, what a lot of people don't seem to get is, at the end of the day, we're still living in the real world. Governments do run countries. This is something that's been, fiat currencies have always died off, right? But governments at the end do run countries, and they do decide our day-to-day lives.
Right.
Without some of the real hardcore maximalists also tend to be anarchists. I believe like Roger Ver, he's very outspoken against taxation, against government. But that I really, on that point, I really stand on the opposite side.
Likewise, I'm exactly the same.
Yeah, someone needs to build our schools. Someone needs to build the roads. There needs to be people funding the police. Do you really want all of this stuff gone? I certainly don't.
Right.
So
it's interesting, actually. I was speaking with one of my children today, driving to school, and I was explaining to them the basics of Bitcoin and also, you know, essential fundamentals of cryptography. And her response was, when I was explaining how initially many of the cryptocurrencies were designed essentially, or the narrative was such to circumvent, through the libertarian ideal, circumvent control, circumvent taxes even. And you mentioned one proponent of that, that's Roger. Another is John McAfee, and there's many others that support that. But her response was, well, Dad, what about the roads? What about the hospitals? Because we were driving past, you know, these services. And that was a really good point, because essentially, you know, the question has to be asked, is subversion, you know, or is circumvention really the answer when essentially people need these services to prosper and to be happy? Because all of the research suggests that those countries that have the most organic and authentic happiness per capita also have some of the best services in the world.
That's so. I'm glad we're on the same page here. It makes it easier to explain. So I think what some of the very strong proponents of Bitcoin, what they're arguing for is to take down a government and take down a fiat. I do think their point of fiat not working and how government controls money there's quite a lot of issues there.
Right.
With the printing of money, mismanagement of money, mismanagement of inflation. These things are huge issues. But I do think that we might need to reverse the order in how we view digital currencies and the future of it. Right now, the last few years, very briefly, every country has run their own currency. China has the RMB, the US has the dollar, the British pound, the Aussie dollar, things like that. And then Bitcoin really started hitting the main stage, and that's when government started really taking notice. I mean, the US has noticed Bitcoin for a long time, but that's mostly because they were trying to shut down funding of terrorism and funding of narcotics trade, things like that. But now it's hitting on a point of the government that's even more important and more threatening to the government is will Bitcoin overtake their sovereign currency? And the thing is, I just don't. It would take quite a miracle for Bitcoin to overtake all currencies. It just seems very, very impossible to me. I do think that Bitcoin has its arguments. In theory, it's great. But let's just look at let me continue my example about Facebook Libra and what happened there.
Right.
So soon, when Facebook Libra came out, I immediately made the prediction that the Chinese government would launch their own digital currency. And I predicted it to happen within 1 to 2 years. And I did think at the time that there were already departments in the government working on blockchain and digital currency. But to my surprise, it came much sooner. I believe it was 2 to 3 weeks ago in August when the People's Bank of China announced that they were pushing hard to quickly move towards digital currency. But a lot of people on social media or proponents of Bitcoin, they thought, oh, this is great. China's moving towards cryptocurrencies, but in fact it's quite the opposite. China has been cashless for the last almost 10 years, 5 to 10 years. WeChat Pay and Alipay have been used for digital payments for a very long time, and it's really almost a cashless society in China. So moving the Chinese RMB onto a blockchain really is making, if anything, it's making the currency more centralized. I do think that it will make life easier as the whole world hopefully moves towards this direction. But I think that's the first step in the next few years of how things will actually be compared to the theory and hopes of Bitcoin maximalists. Right. Because somewhere in the middle we're going to find reality. Right now, it's not heading towards the direction of using Bitcoin over traditional fiat currencies. With countries like the US and China moving towards digital, I think the first step will be each country moving more towards digital currencies and digital payments for daily use. If anything, the blockchain will hardly be noticeable. I imagine when China does go fully move their money to a digital currency onto the blockchain, even it's mostly to lower the transaction fees, make it faster, cut down on staffing costs in the banks, cut down on all these other costs of maybe even one day having no physical location for banks. That's a no-brainer for any government to move their currency digital. But
and especially now, since we see Libra really lead the way in the potential of this in the enterprise sector. So let's keep talking about this, because Libra really, puts the light on the power of enterprise, not so much the government. And that's why there's been this duality and there's this diatribe that's emerged at Congress even, because there's also worry from the government sector that the enterprise sector could really take over and have their own internal currency mechanisms via the blockchain to enable greater independent economies to emerge. Obviously, the argument from Facebook was that it was going to be bifurcated, it was going to be separate. The reality is that never is the common trend over the long term. So the question now it needs to be raised is both enterprise and government interests in creating blockchain-based digital currencies a serious concern for the emergence of what is supposed to be the people's coin, what is supposed to be coins in which that enable transactions without the influence of these typically nefarious actors, and they are the enterprise and the government sectors.
I understand. So these from the enterprise and the government side, that side is really completely separate from the Bitcoin side. It almost has nothing to do with it. I think from a net macro perspective, it's a net benefit for Bitcoin, because it does only on the sense that it draws more these enterprises and governments using blockchain more. It does slowly draw more attention towards Bitcoin as people read about companies like Facebook, Libra, and I'm sure many other companies in the next few years will follow suit. As people read about this new shift towards digital currencies attached to working on the blockchain using miners, they'll start. I mean, it's a natural thing where people start Googling, people start researching more about the blockchain. What is blockchain? What is this blockchain that the Facebook Libra is going to be on? Then you automatically will come to Bitcoin. It'll be a very small percentage, and I'm sure it'll slowly grow, but I think it's a net positive for Bitcoin.
Right. Well, let's talk about stable coins though, Dave, because when we're talking about government interests, you mentioned China, that essentially is going to be a stable coin digitized via blockchain technology. And then we talk about Libra, that once again is another stable coin for enterprise and specifically to suit the needs of Facebook. And then backed by significant enterprise interests and parties through their dual coin system. Now, when it comes to BTC, as that fuel for the big B ecosystem, that's not a stable coin. Are you concerned about the current architecting of stable coins? Within the social narratives, within the crypto arena, where we're seeing many other parties come to the fore, and technologies and teams trying to really argue that we need a social stablecoin to challenge the status quo and to challenge the emergence of these digital currencies from the top down.
The problem with the current state of the market is if you really just take a step back and look at stablecoins in general, you'll see how far we are from BTC being a dominant or widely used currency compared to fiat currencies. I mean, what's the whole point of a stable coin, right? It's pegged to a dollar. It's pegged to a fiat currency. Even today, Bitcoin's value is derived and talked about in terms of fiat, usually in terms of the US dollar, right? So stable coins, looking at stable coins, you really see the power the overwhelming power that governments still have over the currencies. Bitcoin is far from overtaking any fiat currency, whether it's the Venezuelan currency or the Chinese or the US dollar. Look at even on that's from the individual's point of view, right? But let's take it a step bigger. Even Facebook, multi-billion-dollar company, is still pales in comparison to any government in the world with trillions in reserves or billions in reserves. And also I'm sure it's in the interest of any government to have strong control over the currencies. The moment that Facebook Libra gets out of control, or they feel like it's starting to become too against government or anarchist, or that government feels that it's losing control, I'm sure they will shut it down. I do think that Facebook will have to operate within the confines of the law as an enterprise, but just by looking at a company as large as Facebook, it still pales in comparison to the power and control that the government has. So I do think that's on that side. Just looking at that, we're far from BTC being a dominant currency. Stable coins. I mean, I've said from the beginning, I think since Tether came out and all of the millions of other stable coins that are out now, it's a good thing. It's a good thing to improve trade in the cryptocurrency markets. It certainly is. Like Tether volume is always highest volume because people are constantly trading back and forth. It's a good way to cash out currencies into USDT. But hey, now that I just mentioned that, when people are trading, they're still trading the profit. At the end of the day, most people are aiming for USDT profits, right? We have to spend our USD somehow. So that in there lies the problem where we see that we're still very far behind looking at Bitcoin as a currency.
Right. So in that context right now, it's clear that whilst belief underpins the current value, you're very much of the belief that this will morph into something of a currency in the future. But if we look at Bitcoin right now, both big B and little b, the function and form of this essentially is still a unit of belief, a unit of a speculative instrument hoping to, morph to something more. So does it concern you at all when we hear the narrative or the discussion of the currency being something of value for the future of the whole ecosystem? Does it concern you that currencies are essentially stable by design? For the uptake of enterprise, for the uptake of the retail sector, for the uptake of SMEs, even for consumers more generally, that would inherently imply a graduation towards stability, not an investment. So is there a paradox, and is there a conundrum in the whole design?
Most definitely there's a problem and a paradox with this, because as we go through time and we head towards the time where the last Bitcoin is mined, I'm not one to say whether Bitcoin will even be of any value when the last Bitcoin is mined. But as we go through time and it becomes more and more scarce, and the volume theoretically will go up and up, it should become more stable. Stability comes with volume. And right now, the volatility of Bitcoin and also the other cryptocurrencies, it comes from too few people trading. We might see daily volumes of 20 billion, or 20 to 60 billion for Bitcoin. But that is very, very small compared to the amount of money that's flowing around in the world. That's why there's such volatility, because at any point, even to this day, one person could affect the entire markets. And that's very rare to see in any other currency in terms of foreign exchange. Let's not talk about stocks, because stocks, it's very possible to manipulate the market too. But compared to currencies, I would say it's near impossible for one entity or a group of people to be manipulating an entire currency. There's just not enough money or volume. You look at the daily fluctuations in currency, it might be less than 1%, 2%, at most 5%, which is already significant change in typical fiat currencies. Bitcoin, 10 to 20% of the day is very normal, which shows it is a problem in that nobody is using Bitcoin as a currency now. But I do think if volume increases and Bitcoin survives as the dominant store of value or investment, it could have the chance of becoming used as a currency one day. But even I would say that's quite a long shot.
Sure. Now, if we talk about, once again, the current use case, now that's essentially that speculative instrument. Now, as you mentioned before, say you purchase a BTC, then subsequent to that, at some point in time, I purchase a BTC. Is it fair in saying, Dave, that the core value for your purchase was the fact that other people subsequently were able to purchase? Because it seems like, in many respects, it's about trying to spread the narrative, that social value, so that there's more uptake, which would then thus imply that the core value is the spread of BTC, big B, so that the small b can be purchased so that you can profit.
Well, that's what we're seeing right now. Especially in the last year or so, we're seeing a lot more adoption in that sense, where more vendors are signing on board to accept cryptocurrencies, not just Bitcoin. For example, there are restaurants across the world that are restaurants, bars are starting to accept Bitcoin. There are the Miami Dolphins, a big sports organization. They're starting to accept, I believe, Litecoin for payments for, I think, tickets and things like that.
Mm-hmm.
But that's still very small scale, and also quite what's the word, quite gimmicky, actually, I think. I think it's great that people are using it, and it is spreading the narrative of Bitcoin, the big B. I think that's wonderful for the space, and I think it's great for growing the future. But in terms of, if we want to talk about Bitcoin's use cases as a payment, we have to really look at on a much larger scale and much larger size of the actual payments. Let's bring it back to the example of me and you. Let's say you wanted to sell your home to me, and I offered to pay you in Bitcoin. Any smart person, I mean, we go through many of these deals on a daily basis, being in this space, right? We hear of how do you want to be paid for this product or service. We're talking, let's say, in the scale of 10 Bitcoin, which is about $100,000 on this day. So if I were to pay for, you were selling me your home for $100,000, and I were to offer you 10 BTC, as any smart investor at that level, you would be thinking, will the value of Bitcoin be going up tomorrow, or will it be going down? And then you think, is it smart for me to take this payment in Bitcoin, or should I just take it in fiat currencies? Right. So that's on that level, which is far different from paying for food or paying for a drink or a burger with Bitcoin. That's whole different games. To talk about Bitcoin being used as a currency, or its potential as a currency, we really need to be talking about it on a much larger level, where people are making investments, making large purchases of homes, automobiles, or even things like insurance, things like that. These use cases are far more important than looking at what I think is quite gimmicky of these small $10 purchases, $20 purchases.
It's really interesting you say that. It's fascinating that you're using the term gimmicky as well, because let's explore the predominant advocates for the kind of SOV narrative. They tend to be the white collar and blue collar males, 20 to 30 years old, in more privileged regions, let's say in the West. And then, and obviously not just, limited to those regions, but predominantly so. Then we also see many other people around the world desperately needing currency, a digital form of currency that can enable them to exit what is very overinflated, very problematic currencies for them to uplift their own social mobility, their economic mobility. So they are looking for a different endpoint, and they're looking for something that is actually going to enfranchise a better economic solution for them in the present moment. So there seems to be different use cases and different needs depending on where you are situated globally. Do you acknowledge that some actually do want to be able to buy bread in a peer-to-peer way through digital cash in some sense?
I think I can break down your question into two parts. First of all, to answer your question about, do people want to be able to pay digitally with peer-to-peer cash? Most definitely. It's the most natural transition from what we are doing today. There are still countries in the world where people are using checks, but as that generation of people slowly pass on, and then the newer generation comes in, first it'll take the people using mobile phones to really reach 100% in the world, where everyone has access to internet. And then the next revolution will be people starting to use digital payments, right? But earlier you mentioned about some governments collapsing, or the currencies collapsing. Recently, with the Venezuelan currency with hyperinflation, it's worth almost nothing. After that, we saw Bitcoin trading volume and purchase of Bitcoin from Venezuela go up a lot. And then with the recent Argentina recently had I believe almost a 50% crash. Yes. Yeah, in the stock market collapse. We also saw Bitcoin trading volume from those regions go up. But that's my analysis of that would be, first of all, it's the complete lack of belief in their own government currency. And second of all, it's easily purchasable, where if someone had to uproot their life and move somewhere else, at least there would be some value. Where it really shows the risk of the government currency being worth nothing far outweighs the risk of the volatility in Bitcoin.
Right. Well, essentially in those instances though, Dave, the purchases being made in those regions where there is a hyperinflated currency, they tend not to be buying that though for currency means. They tend to be buying that as a store of value or as an assumed store of value. But what about those in the regions of the world where they're not looking for a store of value, but they're actually looking for a currency? And I'm being quite serious about this because we see the emergence of digital currencies or something similar to, to that effect emerge pre-blockchain, where there's experimentations of how they can go and engage digitally via their mobile phones, which is their core technological asset. We see that particularly in Africa, for example, who are high consumers of crypto. What do you say to those parties who desperately need currency solutions to, be competitive globally, to uplift their economic standards? Surely that's a fair argument to suggest that there is a great use case and need for them now.
Yeah, so the countries we've just been talking about, Africa, Venezuela, Argentina, a lot of these, there's a huge dichotomy between having a use case and also how strong the government is handling their own currency and their own economies, right? The countries that we're talking about, where people, of course, being unbanked, having no access to cash, or being subject to hyperinflation, those are all very big problems that I do think digital currencies can solve, and I do think Bitcoin has a big part to play in solving that. But the problem is, with countries that are experiencing hyperinflation or a large amount of the population being unbanked, those countries also tend to have very, very weak control over their own currency. We look at let me bring back to China as an example. I believe 80% of the population here currently is either using WeChat Pay or Alipay. And China, not very long ago, was considered very rural. But the Chinese government does have the advantage that it handles its currency very, very strongly, and it controls it very well. And it is one of the strongest economies. But you compare that to somewhere like Africa, where a lot of the like the Zimbabwe dollar, these currencies end up being worth nothing. So the only gateway for people there to access better to make their financial situations better is maybe towards Bitcoin. And I think that's a great thing. People put their money in Bitcoin because it's less volatile, and also, hey, it might, as long as it's less volatile, it might be a better use case to pay for something on a small scale. For example, let's say we're buying a loaf of bread in Bitcoin in a third world country. That might be a better use case than using their own national currency, right?
Right. Well, currently, likely not, because of as you mentioned before, it's extremely volatile as an asset itself, if it is such an asset. But obviously, the point is that some are really looking for that currency to work. Now, going back to the discussion of stablecoins, for example, I did want to ask you, if countries are starting to develop their own, and China's leading the way, their own digital currencies, and if the G7 alliance does emerge and strengthen, and there's consolidation among these emerging interests and emerging digital currencies, what's the point of BTC at that level once we potentially see that unfold, that potential? Because at that point, the question would be, does it become superfluous? Does it become redundant as a means of transacting, especially when governments could technically attempt to not ban it because it's impossible, but really put pressure on it?
So when governments do eventually head towards digital currencies and make that transition, I think it almost makes no difference to the state of Bitcoin now compared to fiat currencies. On one side we have an upgrade of moving towards digital on the government side, but on the Bitcoin really has almost nothing to do with that. I don't think this really affects Bitcoin, because at the end of the day, when governments do move towards digital currencies, let's just take the US and China. Their currency exchange rate will still be pegged to US dollar versus Chinese RMB. This still has nothing to do with Bitcoin. If anything, I actually think this still is a net positive for Bitcoin. It drives more awareness towards blockchain technology, which is the foundation of Bitcoin. And two, if anything, digital currencies make it easier for governments to track your finances.
True, because of the nature of blockchain and transparency. Well, let's talk about scarcity, because you were talking about that before. Some currency experts have argued that the inherent scarcity modeling is one of the core flaws of Bitcoin, given that there were initially a 21 million cap, and then now we're seeing a significantly smaller number in true supply. Does that actually, do you think, potentially stifle the potential for this to emerge as a strong currency in the future, because it implies both currently now that SOV, that finite, so-called socially finite and mechanistically finite resource, that is BTC, but does it need to be redressed? Is there a problem in the fact that it is scarce and designed solely as a speculative asset?
Unfortunately, there's nothing we can do about how it's designed, right? But I do think I see what you mean about it possibly being a flaw. From two perspectives. On the economic side, the lesser supply obviously should mean more demand in the future, and I think inherently that's the vision of Satoshi. But then on the other side, because it's so speculative right now, and also there are a lot of Bitcoins being lost, and it's really hard to tell how many there actually are. With the decreasing supply, this is mentally unattractive to a lot of people. I do think it's a problem, but I do think that at the end of the day, economics wins in the end, and I do think scarcity and decreasing supply is a good thing.
But do you think, given that if we assess currencies, forgetting about gold for a moment, if we're seeing a transitioning over time from gold to currency, or the characteristics morph, are you concerned at all that essentially what underpins the nature of currencies, which is to have a significant supply for a start, or in some respects an infinite supply, but do you think that the whole finitude, that endpoint design, is actually counter to it trying to have some degree of monetary trust, in the sense that we know, for example, that the dollar is not going to fluctuate too much as we transact for goods and services, and even other fiat or any other transactional means? It's difficult at this point in time to trust in the volatility as a currency. So how does BTC address the volatility problem if the demand continues?
Like I said before, the only way for it to become less volatile is for volume to increase far more. It would take at least 10 to 100 times this in the growth of the market size and trading volume for BTC to be a little more stable.
Right, but would that take traditional investments and enterprise investments to come into play?
Most definitely. It'll take an institutional investment, and also possibly, but very small chance of this, even on the government level, to invest into BTC or use it as a reserve of some kind, or as a hedge against other currencies. I mean, we've heard of,
Sorry, I was just going to say, so in that sense, given we've been talking about that, Dave, do you think that's almost its own conundrum, because we can see indicators of the antithesis of adoption from the top down? It's more likely that it will be, a rejection rather than an adoption from those parties, because they have their own interests. So are we already at risk of, a gradual decline at some point, because we're reliant on that significant growth that may not happen?
It's most definitely a risk, but I stand on the side of BTC going more use of it, and also more investment in it, because with the way the world economy is working now, you mentioned it seems the only way to go for BTC is up, because we look at what's going on around the world. Earlier we talked about asymmetrical growth compared to the fiat currencies. You also mentioned earlier about governments having the power to infinitely increase the supply of currency. The only reason that the currencies of the larger countries aren't fluctuating as much is because there's already a huge supply, and there's a very large volume use and in trade, the dollar is not going to be fluctuating much.
Hmm.
But we look over time, the inflation is a very serious thing. The value of our dollar and the dollars we're making or working for is always becoming less and less due to inflation. What we can buy with a dollar today is less than we can buy with a dollar 10 years from now. Right. That's the inherent problem that I think BTC addresses, because you look at certain events across the world, especially in today's day and age, where it's so easy for people, the average person, to see all these events where people hopefully will start realizing, damn, I really don't have much control over my money. The governments can take your money. Governments can freeze your accounts or know how much you have at any point in time, and that's a very scary thing. I think as this generation of people, the young generation, start getting older, and they start dealing with the issues of finances on a larger level, that's when they'll start feeling the effects of how important it is to have control over your own money. We look at a great example of Cyprus in 2013, when the banks just took all the people's savings. I think 50% of the people's savings in the banks were used to pay off the government debt, and there's nothing that people could do about it. On that day, the price of Bitcoin doubled. I think it was from $100 to $200 maybe.
Mm-hmm.
But you look at events like this, and it's a clear example of people being smart in the end and saying, hey, maybe it's not such a great thing for all my worth or value to be controlled by the government.
Right, and you make a good point, but obviously, those illusions hark back to, at what point do we support goods and services via some sort of monetary support? Whether we call that tax or whether we call that, a means in which we uphold the nations in terms of for the social good, for the necessities of the people. And that's a question I think needs to be raised. But let's talk about the technological underpinnings of BTC just for a moment. Now, there's a reasonable argument put forth with every technological innovation that the first simply isn't the best technologically. Now, with brand, we know that BTC has the biggest reach. We know it has the best network. We know it has the best narrative. But when it comes to the technological foundation, there's a lot of questions about whether or not it has indeed the capacity at all to scale to become a currency. Especially given its crudeness, given that there's a limited block size or the small block size nature of this, given that so many want to secure it as the SOV, and many proponents in the maximalist camp don't really want it to become a currency at all. So is the technological crudeness of this an inherent problem for it, considering there's so many other stablecoins and startups that are trying to literally compete at that level to emerge as a currency?
The BTC has its technological setbacks, like you mentioned, the smaller blocks, the slow transfers per second, transactions per second, and also I think the main thing that BTC does have going for it is still just the belief in it being number one. I think the point that you mentioned about how in tech, a lot of the first pioneers are the ones who get shot in the back. BTC, I do think that in the near future, BTC will still be dominant. But I can say today, almost with certainty, I don't think that BTC will be the one that survives in the end. I do hope that in my lifetime, we will move. The whole world will move completely cashless and move towards digital currencies. That's step one. And then I do hope that my dream would be that the world uses a global currency, but I am a realist, and I don't think that will happen in my lifetime, because countries have a big call issues between each other.
Sure, and that's a big call to say not in your lifetime. So you really do have a very, very longitudinal vision for the emergence of some sort of digital people's currency. Now, do you think in your lifetime, though, there will be the evidence of a digital currency from the top down?
Do you mean from a government level? From
a government or from an enterprise like Libra, for example?
Oh, most definitely. I think that's very simple. I think this will happen in the next few years. I don't even think it'll take my lifetime. I think with China and the US both moving towards digital currencies, the problem with the US is that the US became such a strong country so early, where people are set in their ways. China only recently came out as a world superpower, and they used a lot of other countries' technologies. They studied from other people what was happening in the world, and now they're coming out with digital currencies. That's the only reason that China is almost cashless right now. I think in the next few years, most developed countries will move to a completely cashless system. It'll be much faster than we can even predict. I think my guess would be in 10 years time, I think all developed countries will be cashless at most 20,
right?
For this generation for the older generation to move on.
You got it.
But in terms of a global one currency, I don't think I'll see that in my lifetime.
Right. Well, given that it's such a long-term vision, right now we're seeing that there is clearly a unit of value. It's a speculative instrument. Now, in the context of the crypto casino, if we coin that term, are you concerned at all about the sheer nature of speculation itself to drive the whole ecosystem, to drive all of the maximalists, drive all of the narratives, to really essentially fill the bags of those who own it? If that's the core asset itself, the belief, and speculation is the driver, does it concern you that we're making a blockchain bet rather than having certainty of value through some sort of evidence utility that backs it, or even some sort of backing, as we alluded to before, from sectors like governments and enterprise?
From sectors like especially from government, the fear and dislike towards Bitcoin is due to, one, the main thing is that they would lose control of their own currency. The second thing is alluding to the point you just mentioned about how it's so speculative. The speculation is a huge problem, but it's a huge problem in the space. Unfortunately, well, I guess unfortunately and fortunately, that's what drives people to this space in the first place, the speculation of it. And then, including myself, in the beginning, when I first heard about it, I thought this is pretty cool as an investment. I'll take a look at it. Then, as you dive more and more deep into it, you realize it has a lot of Bitcoin has a lot of uses. Hopefully, the theory of Bitcoin has a lot of uses one day that could really make your life, our own lives, better in certain ways, as a revolution of personal finance and how money works.
Right.
But speculation is definitely it's a huge problem that we can't avoid, because it does hurt the narrative of this whole future money and how money should be in the future. But
it certainly does. And also, if I can just jump in for a moment, the proof is in the pudding with regard to the way in which people, really uplift the investment narrative, because if, often those bag holders want others to buy that and therefore increase their own position. Now, one of the questions that I think needs to be brought forward is the question of whether or not there's wealth disparity, whether there's an injustice from the outset, when we know it's open source. We know that those very tech-driven and tech-centric nerds of the day were very much about the cryptographic premise and the value of these tokenized units for transfer peer-to-peer. But the reality is, at that time, Dave, very few in the world had access to that knowledge, which was the asset in itself, and very few had access to engage at that level. And whilst many put forward the argument that it was open source and it was available to all, the reality is that just wasn't the case. And so is it fair to infer that there's a nuance of a pyramid system? And I don't mean Ponzi, but I literally do mean hierarchically positioned, because the blockchain billionaires were the early entrants. They were the ones early. They were the ones who have the greatest amount of profit, the greatest amount of financial success because of their engagement in BTC. So are you concerned at all about the evidence that suggests that the earlier you were in this BTC game, the more you profited from it?
Hi, Brad. I just want to check that. Can you still hear me right now?
Yeah, I can still hear you.
Okay, great. It's still working. To answer this has been a hot topic of discussion amongst myself and my peers and colleagues. The income disparity, not income disparity, the wealth disparity amongst Bitcoin. And actually, there's most definitely a huge disparity of the wealthy in Bitcoin and the Bitcoin addresses that hold a lot of the Bitcoin. I actually just read a thread written by Preeti Kasareddy.
Yes, I'm really impressed with her thread as well. I tweeted it out.
Yeah, I read her threads, and I believe it said 1% of addresses hold 95% of the Bitcoin. And then they did some more analysis where after cutting out the exchange wallet addresses and all that, they find about 10% of addresses hold 95% of the Bitcoin. And
which
like
is substantial.
Incredibly substantial. You compare that to world wealth income disparity, which estimates show that about 10% hold, I believe, 40 to 50% of all the wealth in the world. And then you look at it varies by different countries, of course, but it's really not that different from the fiat currencies or traditional wealth. The problem, like you mentioned, is the wealth that in Bitcoin, the largest Bitcoin addresses, a lot of them tend to be the cypherpunks of the early days. A lot of them are probably even narcotics dealers or illicit activity dealers back in the Silk Road days that had a lot of leftover Bitcoin. So that is a big problem in that it's a big problem, but also it's a reality of how the world works.
But also with regard to digital, because this is digitized, and the fact that there is this transparency all the way back to addresses, as Preeti, had contended. And also there's a lot of assessments being done as per the Gini coefficient to suggest that this truly is an economically disparate and an economically problematic system, because it reinforces the kind of inequality we've seen in the past through monetary policy. It doesn't seem to be improving it. It seems to be questioning the problems of this design. And so when you look deeply into the architecture and the fact that you have these cyberpunk blockchain billionaires now, the problem is the ability to thwart the marketplace at any given point. And we've seen the suggestions of this in the innuendo through the hashing wars and through the power of some of these players. Now that certainly should be a concern to many, I would imagine, because if there is this inherent power from so few, how does that give us confidence to argue that this is a safe and secure investment?
I don't think that it does give us any safety or security towards viewing it as a safe investment, not from an individual side and not from a government perspective. It's a big problem with how things have transgressed over time with Bitcoin, that so little of the addresses hold such a large amount.
It's a huge problem because, sorry to interject, but let's really keep this going. Let's say I'm, someone with I'm a billionaire and I have a lot of fiat rather than Bitcoin. Now, if I go and sell my fiat tomorrow, it's not really going to affect you or anybody else, since you have some fiat in your bank account. And that's the issue, is that the sale of, that at that degree can really impact me if I had a small holding.
Yeah. So this goes back to my point of one way to not solve it, but one thing that would help would be increased volume, far more volume, where even a sale of $1 billion or $2 billion in Bitcoin wouldn't affect the market. But like I said, we're far from that at this point. If I were to come up with a theory of how to solve this problem using digital currencies, blockchain, and solving this problem of wealth disparity, we can maybe look at an entirely new system that isn't Bitcoin. But I can say one thing that scares me about the survival of Bitcoin is I can almost say with certainty that there's no way that the U.S. government or the Chinese government or any large government in the world is going to be buying out the Bitcoin in reserves to make a few of the early cypherpunks or these drug dealers very wealthy people. It's just
right. Well, we did see the confiscation in Belgium, I believe, where they have a significant stake. If you look through, the top stakeholders or the top owners of Bitcoin, I think one of them is, Belgium, if I'm wrong. And the reason was obviously because of the nefarious actions of certain parties, and then they'd confiscated those. But once again, it's really the question of control. If we're trying to thwart control and we're trying to reinvent new narratives that enable more productive means of monetary policy and exchange, then how on earth are we doing that if we're enabling the same problem of, a small number of people having the capacity? I don't mean they're going to. And often we're sold the narrative from the wider Twitter sphere that, just because they can doesn't mean they will. But is that enough? In terms of human condition and trust, the fact that it can be done is worrisome. the fact that markets can be thwarted in BTC at the flick of, at the sending of, substantial, holdings to the market. I mean, surely, and we've already seen this play out with those Ponzi schemes recently in China and the kind of ripple effect that that had, no pun intended. So it's just a concern that, we're raising the question now of, are we actually in an equitable system that is open and transparent and for the people? Or, is it something different, given that we see evidence of these blockchain billionaires really advocating for monetary policy to change and advocating for libertarian ideals, but they're sitting in their cushy positions as billionaires?
It's almost impossible to try to guess what the mindset of these people who hold a lot of Bitcoin in their wallets are. Some of them are maximalists. Some of them want to take down governments. Some of them might just be people who got lucky, right? So I think it's almost pointless to try to guess what's on their minds. I think we can only look at what's in the near future for Bitcoin. What we do see that is factual is there's a decreasing supply. There are more and more people buying and interested in Bitcoin. But what we can't change is the wealth disparity. I think over time, as more and more retail investors, more and more people using it come in, and more institutional money comes in, that will far outweigh the amount of Bitcoin or the amount of wealth that's held in these select few wallets.
Right. And Dave, in that context, let's talk about the wider space for a moment. Now, we often see very sort of vitriolic diatribes emerge from any camp when they're passionate about their own crypto. Often the subjectivities of their own position, because they own something, really drives, a very rational, very emotional response when anything's critiqued at all. Now, in the context of BTC, for example, do you see that or do you concede there's any problem, given that we see a lot of infighting, we see a lot of sort of crypto wars happening about between the emergence of so-called altcoins or shitcoins as opposed to BTC? And, are these even real? Does the concept of alt and shitcoin even mean anything other than a term of convenience?
Oh, I think unfortunately I don't like the terms of altcoins or shitcoins, but unfortunately too, that's the state of the market today. These are the quote unquote professional terms we use for these investment vehicles. But I think in terms of pushing for this whole space, if anybody is pushing for BTC to move forward or BTC to be more adopted, that's really pushing towards the rest of the space, including altcoins and these so-called shitcoins people talk about. Altcoins, there is a big problem with not only altcoins but BTC in general, where there's a big bias where people fall into. If you are invested in something, there is more of an emotional attachment where you end up pushing or promoting that coin more. That's just natural human. It's just human nature, right?
Exactly.
But I do think at the end of the day, pushing the awareness and use of BTC is good for the entire market, because naturally people will transition to researching and reading more about a lot of these other projects, and some of them are technically better than BTC in certain ways. Some of them perform different functions, and I think all these other coins, there's a lot of great projects out there that are worth looking at.
Right.
So,
well, in that context, though, is the power of possession actually impinging on a fair response to the emergence of better technological startups? For those who have very specific verticals and specific use cases, often the narrative is that BTC is king, and often it's put forward that they, regardless of any technological innovation, they will always be king on the crypto chessboard. The problem with that thinking potentially is, are there other? Does every single startup have its own chessboard to play in, its own arena? And can we necessarily group them all, in one sort of complex melee or complex convoluted state that determines that somehow they're all positioned from top to bottom and argue and retain that argument that BTC is king? I say that because when you really explore the fundamentals of some of these startups, the premise for many of them is really to engage in the business of tomorrow. to really become a fuel for something bigger than or different to a currency. We see cloud, computing as one example. There's multiple verticals, but often this narrative of crypto, of BTC being the crypto king, is put forth, I would argue, because of holdings, because of the predominance of ownership, because people, are emotionally connected to this coin of belief.
There's a lot of great projects out there that are doing some pretty cool things. In industries like healthcare, supply chain, cloud computing, like you mentioned, I think there are a lot of great blockchain projects out there that have the potential to, and the great idea from the beginning to really change the world in a certain way. But unfortunately, what 2017 did for the market was that it hurt a lot of these companies that are trying to actually do something much like any tech startup. Let's try to separate crypto projects and let's call it what it is, an actual tech startup company.
Mm-hmm.
Right? A lot of I don't like to call it projects as much these days, because we have to start looking at it as a tech startup.
Exactly.
But the problem with 2017 is that it really marred the image of a lot of these great tech startups from a lot of bright minds. On the good side is that it drew the most amount of attention towards cryptocurrencies. I've been looking at this. This is more of a bottom-up approach, where projects or companies raise money for a certain idea. They might raise $20 million. They might raise $100 million. Then they start trying to acquire users and try to put their product out. Whereas I think that's not the right way to do something traditionally, and it's not the smartest way. It's a high risk way that ends up with over 90% of the companies out there in crypto failing, and then that hurts the industry even more.
Right. So essentially, you're talking about that pump and dump tendency we've seen in the past, whether through ICO or IEO or whatever mechanisms utilized to enable early investors to essentially offload their investment, because many of them were in it for the money. Many of them weren't in it for the technology. And even now, it's important, I think, we talk about the fact that many of the frontline supporters, whether they be VCs, whether they be exchanges, whether they be those all-important media representatives as influencers and beyond, many of them are, still advocating for BTC as king. And therefore, a lot of the support is still streaming in that direction. Ironically, when they're speaking about these startups, when they're promoting these startups and when they're advocating for their value, a lot of the intrinsic support, underlying that's going into BTC. So it's an irony that's emerging right now.
So the problem of one problem is certainly the pump and dump schemes, or the scams, or the all these really bad schemes that happened throughout this last few years. That's hurt the image of this space. But on the other hand, some of it is just natural operators of the company, and also natural problems that occur when you have any startup. Sometimes things don't work out. Sometimes you might have the right idea, but execution doesn't pan out as you imagined. This is a very natural thing in all startups, where over 90% of any startup, not only in crypto, will fail. So we can't just blame this on pump and dump schemes, because there are startups out there that it wasn't because of anything. They can't blame it on any reason other than that they failed themselves. So this leads me on to my next point of how I think the industry should be moving forward. And I'll use the example of Facebook Libra again. Facebook Libra, what they did, let's forget that Facebook is a very large company that abides by government laws, but what they're doing is pretty much launching an ICO, but they're doing it from a top-down approach rather than a bottom-up. Exactly. They already have over 2 billion users, and they're really just onboarding a new product. I think that's the way of much lower risk and a much more rate of success, where you're just plugging in your new product into an existing user base. And also, what a lot of cryptocurrency projects have forgotten is a traditional way of raising money is not raising money and then trying to get users or build your product after. It's actually most companies tend to be very frugal. Startup companies tend to be very frugal, start with their own money, maybe borrow a little bit of money from family, from friends, maybe they pitch a small angel investor for seed money. They test out their product over many iterations. They do customer surveys, they do market surveys whether they would like the product. They make changes, and then they go for the fundraising of much larger money.
It's very reminiscent of the IPO model, in the Series A and further to that. So what you're saying is that we need to be more patient. We need to taking more time, and the less is more approach. Perhaps there were just too many in that influx period, or that sudden boom period of 2017, where many of them were essentially just empty shells and they were scams. Now you're hinting at something more long term with a slower pace to ensure that the token itself represents the value of the economy and a value of that business or value of that startup.
Precisely. I mean, we look at the ICO companies, the cryptocurrency companies in the past few years, and they what's often desired for, or people anticipate, is announcements of partnerships, right?
Right.
More recently, it's become more of a joke where announcements really are just a quick pump in the price, even the largest of announcements. But why not reverse the steps where you've discussed or talked to these partners beforehand, and maybe even get an investment from them beforehand, before launching your crypto companies, because that will guarantee a much higher rate of success than raising $30 million in Ethereum and then trying to put out a product, then you hire people. It's really quite a misappropriated step.
Well, let's talk about that in the context of exchanges, because you're alluding to the reliance on narratives, whether they be partnerships, whether they be anything. Because I want to talk about that, pulling it back to BTC, because once again, if it is a mechanistic systematized approach to store of value, why do so many of the maximalists and the Bitcoiners need to promote this and shill this? I think it's a fair question, because if it's mechanistically designed, why does there need to be such a consistent push for this socially and through social media?
I think on one hand, the supporters of BTC, some do truly support the vision of how it can change the future of finance and money. On the other hand, we have people who just want to pump up the price or increase their own positions. Right. Also, these two don't necessarily have to be mutually exclusive. You could be both, right? I could want the future of money towards this direction, and I also want to move my positions upwards.
Right, but in that context, though, I wanted to ask you, how imperative is the media to BTC? If we know from the pump and dump analysis that announcements and hype through media, and also obviously underpinning market making, all kinds of constructs and approaches that were employed to really uplift value in the short term, how do we know none of that's going on with BTC? Because the suggestion is that the volatility also is caused by some of these actions within that camp as well.
Well, most definitely on a global scale. Even though BTC, the volume is the highest, and also it's the largest currency, there's most definitely still manipulation and also these sorts of things that go on. But I think media is still required, because at the end of the day, in today's fast-paced world where so much information is flowing around and people can learn things so quickly, it's important to have media focus and media attention, and also social awareness of Bitcoin and what's going on. Let's just take an example of me and you. I'm certain the only way we heard about it was either through media, social media. We read an article, or we heard it through a friend. And this is all through increasing social media and awareness, and just traditional media focus on BTC.
Right.
It's still very important.
And that's exactly true. I mean, certainly from my experience, that did happen. I was watching a documentary on Bitcoin. But the thing is, I want to hark back to your suggestion that many of these startups should be really waiting until they have proof of utility, proof of use case, and proof of something more than just, a need to raise capital. Now, we could argue that BTC is not yet at that proof of utility, proof of currency that is the fundamental, point of interest for many who regard the original white paper as something of value. Because if peer-to-peer cash-based systems are part of the overall value set for BTC, then isn't it fair to also be congruent with that argument and say, well, we're not there yet. So currently it's just simply not operating in that, you know, with that in mind, with that premise in mind. And should we actually be even on exchanges as an SOV alone?
I think what you're trying to say is that BTC is as a store of value to do with on these exchanges. It makes it
even more volatile.
It's not really, yeah. But like I said before, it's only because BTC is the most believed in. But we look at the properties of a lot of the other cryptocurrencies. Let's just take Tether, for example.
Mm-hmm.
It's up to now, I would say it's quite believed in. It is quite stable as a stable coin. It is a good use of a stable coin, and also arguably it might be used even more as a transfer of value than BTC is right now.
And why would that be, do you think? Is it because it is stable?
It's because most definitely because it's stable, and also it's very attached to it's attached to a fiat currency. It's attached to a US dollar, and that just in that example itself, it shows predominantly how far BTC is behind to be used as a currency or store of value.
Right. And in that context, Dave, do you think that BTC also has this intractable association with fiat? Given that, you know, I was listening to Dan, who, you know, is who recently debated, it was Vinny Lingham. They were debating about BTC at that stage and looking at specifically wealth disparity. And one of the things he said was that as, you know, those early investors, you know, start to need capital for goods and services, they'll sell some of that BTC asset for their needs. And he alluded to the cost of housing in San Francisco. And I thought a lot about that. It was clear that fiat is a fundamental part of the process, because for him to go and access those goods and services, he has to then validate the existence and the benefits of fiat for him to go and engage in normal society. So do you think that there's also, you know, an intractable bond, you know, that hermetic association between BTC and fiat that many people don't really acknowledge?
Most definitely, it's not acknowledged, especially by a lot of the BTC maximalists. That's also inherent in. That's also a reason why BTC maximalists tend to discount any of the other currencies, because a lot of the other cryptocurrency companies, they raise their money in BTC or ETH, and then they have to cash it out to fiat currencies to fund, for example, housing, like you mentioned. It's most definitely still hardly tied to fiat currencies, and that's a problem. But also, what can we really do about that at this point in time? BTC is just we're still very early in the beginning stages of Bitcoin and cryptocurrencies in general. We haven't even if I were to compare this to another industry, we haven't even hit dial-up internet yet. This is the very beginnings of the industry, and I do think it's going to be moving very fast, where the ratio of BTC to fiat currencies will slowly be getting less and less dominant towards fiat.
Got it. Now, with regard to the current suggestion that institutional enterprise money is flowing in, there's very little evidence of that, and we see that there's a real shift towards, you know, an increasing amount of BTC dominance right now, and obviously that is very volatile in itself. That percentage. Do you feel that the other startups, let's say, to not use the other terms that we've heard thrown around, are they as important as BTC in terms of fueling BTC? You know, given that, you know, as you alluded to, in China, for example, those other startups really attract and garner a lot of support as opposed to BTC. So are they just as crucial as BTC in supporting the flourishing of this ecosystem that we call crypto?
Most definitely not as important as Bitcoin. To me, Bitcoin is the only truly decentralized one that is not held and owned by any single entity. It's decentralized in the fact that it's all over the world. It's believed in by people all across the world. But it's really quite separate from a lot of these other cryptocurrency companies. A lot of these companies are targeting targeting to solve issues in specific industries like computing, supply chain, luxury goods, all these types of industries. A lot of them are specific towards one industry, and that really has nothing to do with how, at least for me personally, how I view Bitcoin as an idea, the early idea of changing the way that money will work for mankind. These cryptocurrency projects, I think what they're doing is great. The companies, they're doing some really cool stuff in that it's definitely cutting down fees, it's cutting down middlemen, it's making transactions faster, and these things are all great for enterprise. They're great for startups. They're great for tech. They're great for, and at the end of the day, they're great for the end users, the people like us.
But in the future, let's say that some of these emerging startups, both now and of tomorrow, start to use the approach you suggested, where they start to empirically show their value in their use case and the mechanisms and the value of their token as a true and authentic utility. If they start to approach it in that respect, is it fair to say that they are doing a one-up? They're redressing a serious problem that BTC simply hasn't been able to do. And that is really showcase from the outset utility first, as opposed to speculation.
I see. Well, the problem with most of the companies out there that have their own cryptocurrencies is that I think not one has really truly addressed the problems that BTC is looking to tackle. There's a few coins out there that are similar to BTC. Litecoin is obviously quite similar. Coins like that are addressing the problems of on a global scale. But there's
also the crypto clones, that are the forks in the BTC family that are really trying to also suggest that they are also one-upping on BTC itself. Obviously, you're aware of that. So some of them are literally trying to emerge as a global currency.
Yeah, so we've got Bitcoin Cash, SV, we've got Bitcoin ABC. These are all all currencies that I mean, everyone has a fighting chance, but where we stand today, Bitcoin is still the dominant one, obviously. Back to your question about what part do these other currencies play? I think it's great that they will change how we live on a daily basis one day, because they are doing some pretty cool things, and we're really improving to a next way of life through connecting tech and how we live on a daily basis. But as a store of value, or as a real dominant currency other than fiat currencies, I really think Bitcoin is the only one so far.
Right. Well, in that respect as well, Dave, do you think that narratives of belief and hype and store of value have superseded technological underpinnings? Because if we look at Bitcoin SV, if we really explore the fundamentals of Bitcoin Cash, for example, we understand how they've addressed some of the issues they argue as important in their camps. Now, they've made real technological changes and amendments to the original code and the original structure, and they are doing that for their own reasons and their own narrative, which is, as they argue, being a peer-to-peer cash system and settlement system. Now, if that's the case, and then we marry that with the fact that there are literally tokens on the market in the top 100 that are literally dog shit. They literally are not doing anything but be there because of the complacency and apathy that is also part of the space, where many people don't care about the tech. They care about the fact that this is a casino, and that while that value is upheld, they'll put the blockchain bet on. So alluding to the questions inherent in each of these so-called crypto clones of the original Bitcoin code, which is happening in your opinion? Is it valorization of code that predominates, or is it the valorization of belief?
I'll just answer yes. The speculative side and the belief in the price far supersedes the belief in the code of
right. So price is king.
Most definitely. We've done surveys through Block Journal of let's just take one example, IEOs, where I believe over 95% of people who buy into IEOs have no idea or have done zero previous research on the projects that they're buying into. That's just one small example in a very burgeoning industry. But you look at the industry in general, 99%, a large majority of the coins out there, people are only purchasing for speculative reasons. They're hoping the price will go up.
Right. And in that respect, does it concern you about the collective itself? Because as someone who's speaking on the front line, and obviously you are as well, often I'm concerned about the collective power of media, coupled with, you know, support from certain power agents, whether they be VCs, whether they be exchanges, or whomever in the space that has a strong voice, whether they be the teams themselves. The collective power to architect success because of the fact that price dictates, you know, support and interest. It's always a major concern, because if this continues, doesn't this render the entire system as a bit of a farce? Because if technology doesn't drive this, what the bloody hell is?
It's most definitely a big issue. It's at the current where we are now is probably the biggest issue, where price is the main focus of this whole industry, cryptocurrency industry in general. Unfortunately, we not only have this issue, we also have the pressing issue of because it's so speculative and because of the anonymous and the nature of cryptocurrencies, governments are also against this movement of trying to make Bitcoin or whichever currency it is in the future as this #1 store of value or a global currency.
Right.
It's a very big problem. But I do think, and I also think that's what's holding back the space. This might, unfortunately, with another tendency of humans is that people do want to make quick money, and they do want to. It is attractive in the first place because of that. But what I do think will happen in the next few years, and I do think it's already happening now, is that eventually a lot of these cryptocurrency projects or companies that are not delivering, and people will then the market will smarten up and stop funneling money or sending money to these types of companies. What eventually will be left over, I think, within a few years' time, we'll be left over with a lot of remaining smart investors, and eventually the money and currencies within the field right now won't just be circling amongst itself. It won't just be washing back and forth between itself and changing hands in this very small group of people right now. It'll eventually be more and more new investors coming in, looking for companies that are really changing things. Unfortunately, right now the market has not smartened up to that level yet, and this might take quite a while.
Right. Well, I have to say, I really appreciate your transparency today, Dave, your willingness to speak in a very candid way about the state of crypto, particularly having a very long discussion about BTC. Very few actually come on board into the hot seat and discuss at this length. So sincerely, thank you on behalf of all those who've listened, and including myself. I've learned a great deal. Obviously, if you'd like to know more about what Dave does as CEO of Black Diamond Group and also the Block Journal, he is a leading figure in media. He's well respected right throughout crypto. And also, if you'd like to check out his Twitter, obviously he's well known as the Godfather there as well. And much respect to you once again for just having this really genuine conversation and really exploring all different tangents and aspects of what is a very complex conversation, what is a very convoluted system we see now emerge. But as one final statement, Dave, do you want to just, give us a bit of a rundown on how you see the future play out with regard to BTC, the overall picture, and most importantly, the question of hero to zero? Is that where BTC is going, or is there something more?
It's hard for me to make such a definitive statement on the future of Bitcoin, but I think we can start by talking about the near future. I do think governments, and I've said repeatedly again, that governments and countries will start moving towards a digital payment system, which is already happening. And I think that this will most likely be on the blockchain. Unfortunately, this is a different narrative than what's happening with Bitcoin. It's completely two separate things. I do think that Bitcoin will reign as king for the foreseeable future, possibly for the rest of my lifetime. But I do think that eventually one day, possibly decades down the line, hundreds of years down the line, we will have a unified digital currency, hopefully. I do think it's a small chance, because when we bring things back to reality, different countries, different cultures, different beliefs, people don't get along. That's just tends to be how humans work. It might
Mm.
take thousands of years for that to happen, but I do think it will happen one day. More realistically, in our lifetime, I do think digital currencies will be something happening very soon. With the speed of how information spreads today, it'll happen and be adopted much quicker than the internet took.
It's exciting times for sure. So essentially, to wrap up, digital currencies, you argue, are coming. There's already evidence of that. Right now, we're hearing a lot of talk from China. You're certainly an advocate for BTC with regard to its current SOV status and also its potential in the future as a currency. You've really addressed some core issues within the discussion today, and you've also alluded to some of the core vulnerabilities, which I really appreciate. But hopefully, Dave, we can catch up again, sometime in the future to really, unpack some of the other startups as well, to really explore the value of the wider ecosystem. But for now, thank you once again for your time. I genuinely appreciate all that you've offered to teach us a bit more about your view on BTC.
Thanks for having me on, Brad. Always a pleasure.
You're welcome, mate.